All right, welcome to the CoinGecko podcast. For today's episode, we have the honor of welcoming Leo Cheng, co-founder and project lead at C.R.E.A.M Finance. I first met Leo from a DAO that both of us are in, the Meta Cartel Venture DAO. Leo is super deep into crypto, DeFi, DAO, and it's great insights, and I'm very glad that Leo is able to join us here today. Um, One interesting fact that I learned about Leo as I was preparing for this podcast was that Leo is actually an electronica DJ who performed in Burning Man. So I actually listened to his Burning Man playlist when preparing the questions for this podcast. So without further ado, welcome to the CoinGecko podcast, Leo.
Yeah, thank you very much. Thanks for having me. I've been a big fan of the work you guys have done here in CoinGecko, and it's an honor to be here.
Yeah, to kick things off, Leo, maybe let's start with a simple explanation of what is C.R.E.A.M Finance and when do you guys start working on C.R.E.A.M?
So C.R.E.A.M is a peer-to-peer lending protocol. Started off as a peer-to-peer lending protocol. We worked on this, started in about July or so. So it's been a little over 6 months now, and it's been a fascinating ride. I think we've gone full circle from lending protocol, useful DeFi Legos to other explorations, and now back to purely focusing on lending.
Mm-hmm. So I mean, you guys started out as a lending and borrowing protocol, right? So I think that the kind of the go-to-market strategy was Compound was kind of the leader in the space, and they have Aave. But the kind of assets that were accepted on Compound is very limited. Aave is a little bit more broad, but I guess you guys were thinking of trying to be more broad with the kind of assets that you guys accept on C.R.E.A.M, right? You guys started out by forking the code base from Compound, I suppose. Why not Aave instead?
Yeah, so I think very similar to you guys at CoinGecko, you move very quickly to, through the DeFi summer, the needs of the DeFi users. We took a very similar approach, right? Look, if you're in DeFi, what do you need? Much the same as if you're in DeFi, you probably need a bunch of tokens listed quickly and not have a real formalized like, well, X, Y, and Z takes, some amount of time to get on because users need to know. From the same way, we started off thinking about what are the kind of things that DeFi users need. As a bunch of degen farmers ourselves and the team, we look at this and we go, hey, we now have these tokens. Why don't these things exist? And it really all started with, why can't you yield and leverage these coins? And, and then we started thinking like, wait, why not? Like, if you're sitting on a bunch of, XRP, LTC, et cetera, coins that can't participate, why can't you? We looked into this a bit. We thought, hey, look, Binance Smart Chain is an interesting place. They're pegged a bunch of tokens, and let's do something about that. So really, some of the idea originated around Binance Smart Chain, what we could do, and some of the things that are there. And then we started thinking, Compound's a very useful, battle-tested protocol. I mean, so is Aave now, but I think back then, 6 months ago, we took a look at this and we thought, well, Compound's been around much longer, relatively speaking. I know DeFi is all very young, but billions of dollars have transited through Compound. We have a lot of respect for those people, those team over there, Robert, Compound Labs, Calvin, and that whole crew. And we thought that in the battle-tested strategy, battle-tested smart contracts, never really had any problems. Billions of dollars flow through it. Like that's the one that works. So that's what we went with.
Mm-hmm. Yeah, it makes sense. Yeah, kind of forgot. Like, I mean, since like for like Aave and Compound has existed for a long time, but if you think about it, Aave is like only 1 year old now. I mean, after it's rebranded from ETHLand, right?
Yeah.
And new launch was roughly 6 months. So yeah, it makes sense why you guys chose Compound now. And how many tokens do you guys accept as collateral these days on C.R.E.A.M, and how do you decide which collateral gets added? And also, I remember like a few months ago, there was kind of like an FTX related token that was kind of added onto C.R.E.A.M, but with very low liquidity, but ends up turning out that it could be a systemic risk to the whole C.R.E.A.M ecosystem. Maybe you can talk a little bit more about that as well.
Yeah, so the strategy overall is to be on the V1 now, and I guess we could talk about V2 a bit later since the merger with Yearn. But V1 has always been, our colleagues over in the United States in the crypto space are very much hampered by the lack of regulatory clarity. Which is the reason why I moved out of San Francisco here to Taipei in the first place. And without that impediment, you could say, we're more like a Binance to a Coinbase, where we could be a little bit more liberal with how we think about token listings. We don't need to worry as much. And that's the approach we took. We wanted to be the long tail of tokens that are useful. And when we thought about initially, when you think about this whole thing, like, you know, I guess a bit of history in our thinking here, other than saying, why can't we, you know, borrow and lend these tokens? You know, we also thought about LP positions like YYCRV to now YUSD. Why can't we then build these things that people want to use? And we kept building on the things we want to use. But as it relates to token listing, initially we had, before we spun up the governance process, we basically listed very aggressively, very quickly, tokens that needed to be listed. Sushi came, you know, very quickly, for example, top of mind. That was like, look, it's highly relevant. People want to use it. Let's open the market. We did that for the stablecoin LP positions. And so that's how we thought about it. And then, so after we established the governance process, allowing C.R.E.A.M token holders to vote, then the current process is that you need to go through governance to vote. The specific thing about FTX, FTT token, it's controversial from the standpoint that there's not as much on-chain liquidity as what may be optimal for the amount of tokens that are on there. So the risk is one where, you know, should FTX token holders deposit a bunch of FTT tokens, or FTT token holders from FTX that deposit a bunch of FTT tokens, and they borrow out a bunch of the other assets, and then they basically, you know, you can see a scenario where the token gets taken out and the FTT, if it becomes worthless, then that's a risk to the system. That is a systemic risk. I don't think that's a wrong argument. But the other side of it too is, like, I think this is where the credit analysis portion is interesting and necessary, and that we get that FTT token holders and Sam and that crew, there's a lot of FUD around this stuff. And, you know, they're after billions of dollars, you know, practically speaking. They're not here to rug C.R.E.A.M for, you know, a few $100 million. Like, come on, like, they got better things to do. With that said, though, on-chain liquidity and lack of on-chain liquidity is a risk, and we want to fix that. So we've actually recently added a supply cap function onto a smart contract, so that tokens can be limited as to how much can be used as collateral. And we're also looking at other ways to provide safety valves in order to, because we've built, in this long tail of token listings, we've built past what Compound is designed to do. They never intended to list a bunch of tokens, as far as I know, and that we needed to kind of adjust this fork in order to do that, which is why we come up with ideas like the supply cap. And now we're working on a collateral cap to further the safety piece. In addition, we're also building tokenomics to help backstop some of this potential risk. We're working with Cover I just got off a call with them this morning to think about ways where we can provide, you know, beyond just smart contract coverage, what else we could do to provide better coverage for those that have interest generally.
Very interesting. Yeah, I'm looking at the list. There's so many tokens. I think there's like close to 40 tokens right now on C.R.E.A.M. Wow, that's a lot indeed. Like, it's probably like the most diverse list lending and borrowing protocol around.
Yep.
And you mentioned earlier just now that you guys, kind of the idea came about because of the Binance Smart Chain ecosystem. Right? Do you guys launch on BSC, or Ethereum was the one that you guys launched first, and then, yeah, what's the story here?
Yeah, so we've launched on BSC as soon as they were ready, and we launched on Ethereum as soon as we were ready. So we launched on Ethereum before BSC, because by the time we launched on Ethereum, our contracts were ready to go. And we were degen farming on Ethereum. We were like, you know, we want to launch this on BSC, yes, but we could certainly use this on Ethereum as well. So that's why we launched first on Ethereum, and as soon as BSC was ready, we launched there as well. Definitely I think when we think about alternatives, or, well, actually maybe a little bit interesting thought process there. We still think about, I guess, layer 2 options or alternatives to Ethereum based on the amount of available assets. Look, if you have a very fast chain and very good capable technology, but you have no assets on there, it's not that useful right now. So when you look at BSC, the use case, given it's EVM compatible, you know, if you're on app.cream.finance and you have the RPC, custom RPC set up for BSC, you can easily switch from Ethereum to BSC and pay a lot lower gas. But certainly the amount of liquidity is not as deep on BSC or anywhere else compared to Ethereum. And that's kind of the trade-off.
And what do you think about Polkadot and Serum? Like, I mean, Sam's pushing Serum heavily, and this is kind of like, I would say, a year where it'll be interesting to monitor whether Serum takes off or not. There's some professional market makers in the space. Polkadot, we all the parachain launching this year. It's probably going to be an interesting year as well. Are you guys thinking of launching on these chains as well, or any other chains?
It's something that we love Ethereum. We have a lot of backers in Ethereum, and that the ecosystem we work in are Ethereum heavy. That said, we're also not very much Ethereum only, as you can see with BSC. We're evaluating other chains for sure, but our current focus is on specifically on lending and how to evolve lending on Ethereum, while looking at how to, at some point, once these other products we're building can be leveraged on the other chains, we will do that. But I think right now, focusing on lending, making sure lending is more secure and is more efficient, more capital efficient, generally speaking, across the various things we're doing. And then we'll continue to deploy to other chains where it makes sense, where and making sense means there are a sufficient amount of assets, sufficient amount of liquidity that we can go. So currently, expansion beyond BSC is sort of a wait and see at this point.
Yeah, I agree with you. I think for all the other layer one chains, I think Ethereum has got enough users. There is some network effect on Ethereum, but every other layer one chain, be it BSC or Polkadot or Serum, like it's kind of a wait and see thing. Like if they can attract users, then yeah, everyone's gonna move their liquidity or whatever. But it's gonna be tough, like really tough competing against Ethereum. Yeah.
Right, definitely.
Let's get back to the lending and borrowing protocol category, the sector, right? So let's talk about how competitive this landscape is. It seems like Compound and Aave has completely dominated this sector. Do you think that, I mean, you guys came in, right, trying to compete. I suppose you guys are number 3 in the space.
Yeah.
Do you think that it's possible for another player to give some of this Aave or Compound some real competition in 2021? Or do you think that these two guys have pretty much firm up the market and no one else can compete against them, and they will just solidify their lead further and dominate things further in 2021 and so on? Yeah.
I think that's a very interesting question in that crypto moves very quickly. So it's very hard to predict and say anyone is particularly the solid winner. I think that right now, Aave and Compound are clearly way ahead in this space, and that, but at the same time, the competition is interesting in DeFi generally, and specifically within the lending space. I think it's actually great and very encouraging that both Stanley and Robert have been nothing but just encouraging and helpful to us, despite the clear overlap and some competition here. I think that in the near future, I think that Compound and Aave will continue to dominate this peer-to-peer lending piece for sure. But as we shift our focus into more of protocol-to-protocol lending in the Iron Bank and the V2, I think that positions us slightly differently and not as directly competitive to these two protocols. But I think that the lead that these two teams have, the knowledge, the liquidity, because liquidity type of thing, the fact that they've been around for a long time and well, long time relative to crypto, and not really seen any serious failures. I think that credibility will help them a long way.
Yeah, I think Stanley is interesting. Right? I mean, he positioned Aave in such a way where it started out as like literally peer-to-peer lending protocol, where it's kind of like a local Bitcoin but for lending and borrowing. But it kind of transitioned into a liquidity pool once he saw kind of that model would gain more traction based on what Compound is saying, and then he kind of innovated and kind of put in place Flash Loan. Right? I believe he was he created
very innovative.
Yeah. And do you guys have Flash Loan on C.R.E.A.M?
We do not, but I think it's a good innovation. We have used flash loans for liquidations through Keeper. I think that flash loan is a key piece of innovation in DeFi, and I know a lot of people, don't like it because of the kind of economic exploits it can do. But just like any tool, it could be used for good or evil. When I think about lending and where the various players are, I know that given that crypto is very borderless, generally speaking, I was having a conversation with a friend yesterday about this, and it does seem like Compound has that North America-based Silicon Valley thing, and then Aave has that UK European thing with Stanley also being European, And then I guess that puts C.R.E.A.M too as like the Asia lending play here, and we're okay with that. We do have an extensive community within the Mandarin speaking and a Korean speaking community. We're expanding on that bit. We think we've got some of our supporters are building more stuff out in the Japanese market. I just did a recording recently for the Japanese market too. As it relates to that part too, I do wonder if the peer-to-peer lending side, if kind of like culture, language, communications would play any part to do with this. It's possible, but I think for now, people just smart contracts talk to smart contracts. Things get localized in languages, and maybe not so much.
Yeah, it's interesting analogy you brought up about how Compound's very, I mean, they're based in the US, so they get the North American mind share, and Aave is the European mind share, and C.R.E.A.M is like quite well positioned for the Asian mind share. Yeah,
Yep.
makes sense. And I know that we're talking before this that there's a lot of collaboration that takes place between you guys at C.R.E.A.M and Compound. This is quite in stark contrast with what we're seeing with the sushi versus Uniswap, where there's quite a lot of angry debates on Twitter between Hayden and the sushi swap devs. So maybe you want to share a little bit more about some of the collaborations that you guys do with Compound and the team. Yeah.
Yeah. So I think this is a very interesting story to share. Is that what really happened here? Some people say, "Wow, you guys work with Compound. That's great." We weren't the first fork of Compound, but certainly we were the fork that my understanding is that we communicated more, and that initially when we had our conversations with Robert, it was about like, look, we should be attributing Compound's code, and we had no problems with that. So we never forked it and said, nah, this is all ours. We very explicitly said, in even our first blog post, hey, this is the work came from Compound and team. We never once took credit for the code. When they notified us, like, hey, look, you guys should be attributing us, we did. Then we got on the call, and then, the position was like, look, you guys built this thing, you should have some of these tokens. So we offered up, basically at that time, 25% of the team tokens to them. Like, look, you guys were the original builders of this thing. You deserve this. Like, it's not even, we want to give tribute back to the people who built this thing. And they said, look, we're not going to take it for free. Like, okay, well, you want to give stuff back to us. Great. Well, what do we need from Compound is we need them to make sure that we're doing this safely. So there are security technical advisors. And so now they have, the team we've given them their share of the tokens. But what's really cool here is that when we had this 1, 2, 3, 4 year staking pool for long-term C.R.E.A.M staking, they went ahead and dumped the first 2 tranches of what we sent them into those pools. So over the long period of time, they're going to be, my estimate's like roughly 10% of the C.R.E.A.M token ownership, which is huge. But the collaboration, though, we have ongoing conversations with them. We have a channel on their Discord. We talk about like, hey, what do you guys think of this? Here's this thing, and what are the risk of adding stuff that rebases, et cetera. Like, we have technical conversations with them. Recently, one of their devs helped us when we implemented the supply cap. They said, hey, look, here's how you can protect. Our dev team last week fixed this, and just this week submitted a pull request to the Compound code. So, whether they accept it or not, whether they find it useful or not, it's okay. We're proud that we shared in the upside with the team that originated the code, and B, we contributed back to the original code base where we forked from. And I think that's actually a much better model where value is shared, both in terms of the token, the governance that they care for us, and then any kind of monetary upside. And 2, the technology, the pull request upgrades of the protocol. I mean, I think that's a great way to collaborate.
Wow, so I didn't know that you guys took 25% of your team token and shared with the Compounds team. That's a big thing to do. Like, very generous of you guys, and not many folks do that. Like, they're all very stingy and they want to keep everything for themselves.
Well, I would also say that we probably wouldn't be where we are today without their help. So even without the original code base, but even with the original code base, with or without their consent, obviously that's within fair use of open source. But beyond that, I mean, I think this is where being giving is helpful in this space, and they too are being super giving, and that you will find zero smack talking between the 2 protocols, and Robert's been supportive all the way in his team, and I can't praise them enough for what happened here.
do you guys give it to the Compound Foundation or to the individual developers in Compound, or how, or is it vested like this 25%?
Yeah, so they it's structured in a way that's basically given to the Compound Labs, the developers that built this thing. And so, but ultimately it's up to the discretion of that team what they do with it. I certainly welcome them into our governance discussions, and that they have been helpful, less overtly. I think that they've been super helpful, just the advice they've been given, and I'm very appreciative.
Yeah, I mean, I never really hear of like Fox giving like some of their tokens to the original team. Like they're always very like, you know, we're out. You're gonna take all the work that the earlier guys have done, put a token in it, keep all the tokens for ourselves, and then kind of compete against the original one, right? So this is the first time I've heard of Fox giving out tokens. So I mean, kudos on you guys to do that, and I see how you guys did that, and the incentives are aligned now. I mean, and there are things that you can do that the Compound team couldn't do, and they also want to push things forward. But I see where things are coming because they're hampered a lot with regulations in the US, I suppose.
Right, and you know, as far as we know, they've not sold anything. They've just been supportive. They help, and I think from their perspective, my thinking here is that they're probably looking at us going like, wow, these are things that we kind of want to try out, and good on you guys to see where this protocol can go. And we're hitting, you know, design challenges that, like I said earlier, not meant to be used this way, but that's okay. And then with the help now of Andre and the Yearn team, we're expanding beyond the original scope of what Compound Code is doing, and certainly happy to continue to contribute to the original Compound code base.
So yeah, you brought up and Andre and the Yearn team, right? So I think in December, or was it
November
2020, you guys announced sort of a merger with the Yearn
Yes.
team, right? And so maybe, I mean, to me, I mean, merger seems like kind of a too big a word to use, but maybe partnership is probably a better word to use. But maybe you might have a different perspective on things. Like there was no token swap and all those things. So, but tell us more about this merger, as you call it, with the Yearn team, and there was a bunch of other mergers in the YFI ecosystem. So
Yes.
share a little bit more with us.
It all happened very quickly, and I think that it's been a very positive thing. So Acropolis, Pickle, Sushi, Cover, us, all in there. I think the story that's not told enough is just how much collaboration there's been within the teams. You know, the teams are super helpful. We have a Discord within the ecosystem that's specific to access only for the people in the ecosystem. There are countless Telegram working groups between the ecosystem partners, and that together we have a bunch of the pieces where I did publish a thing on a tweet called the DeFi Voltron, and that whole idea that we've got all the pieces in, and it creates an automation robot that is now more powerful than the parts by themselves, and it allows for focus and allows for specializations. For example, one of the things we're talking about recently is, well, it's already there. We're trying to figure out how to deploy it better. It's like, you know, we're listing something like LP position. So actually, this might be the first time we're disclosing this publicly, but yeah, we're we're listing LP positions on SushiSwap and Uniswap because they're valuable collateral. They have liquidity, and people want to be able to do things with them. And in that way, we debated inside the team, like, hey, you know, we've built this out actually. The ability for a user to stake the LP position and then perhaps automate the farming of sushi and then turning it back into X sushi. So as a depositor, as a supplier, you might put in a sushi ETH LP position deposited, and then you might go ahead and, you know, leverage on other things, Bitcoin, Ethereum, stable coins, what have you. And then when you do withdraw your tokens from the LP positions, you're going to get with you X sushi. But now the question is, what are we? Are we a lending protocol? Are we a yield optimizer? So it's like, no, we might want to leave that for our colleagues at Yearn to do this. So we're specializing. The specialization is that we could specialize on the lending part, and we're pushing all the AMM stuff we built from forking balancer code into Sushi Swap, here, take all that liquidity. We don't want that TVL because we want to focus on lending TVL, and you guys are the AMM of the group. You guys go do that. Now, I think the debate about merger versus partnership, I don't think protocols would easily give it up this fast if it were quote unquote a partnership. But in this merger scenario, we're constantly talking with the various different partners within the ecosystem, as well as like Alpha. They work really closely with us. They're not officially part of the Yearn ecosystem merger, but they're definitely a strong partner. But within the ecosystem members, we talk all the time. We have calls within the ecosystem partners. We ping each other within the ecosystem. For example, when the Iron Bank came out, the question came from some of the community that, well, so is cover insurance going to cover Iron Bank? And we just went to that part of the Discord, pinged the team, hey, just want to clarify, this is covered, right? So yes, it is. Go ahead. Like, great. So the merger, though there's no real like stated within the treasury of the token goes here in a traditional sense, what you're seeing now, there's some of that going on. Some of the for example, we've given 2 grants to Yearn strategists. And then there are other discussions as to how to tie the tokenomics together. So back to the merger versus partnership piece, I think just because the tokenomics haven't been sorted out fully yet doesn't mean that it won't be in the future.
Okay, I see where things are going now. It's just kind of announcement and figure things out as you go along.
Yeah, and the ecosystem's already collaborating like a whole fully functional team, and that's true.
In your previous answer, you mentioned a little bit about LP tokens, right? So one of the things that I think will happen this year is that at this point in time, lending and borrowing protocols like you guys, C.R.E.A.M, Compound, Aave, you only accept like tokens. You guys don't accept LP tokens. But if you think about it, if you accept WBTC, if you accept ETH, there's no reason why you can't accept the WBTC ETH LP token, because
that's right.
It is the same thing. It's just wrapped in an LP token, and then you can kind of draw out. So are you guys planning to kind of do LP tokens for?
Yes, we're launching LP tokens in probably another week, 2 week maximum. The thinking here is that going back to the original kind of design principle, we are DeFi degen people ourselves, and I look at these LP positions I have, and I think it's great that I can, well, I've moved I'm biased for Sushi over Uniswap for clearly they're part of our team now. So, but besides that, whether it's Uniswap or Sushi Swap tokens, you have this liquidity that's sitting, for lack of a better term, idle. Now, of course, when you do put it into the C.R.E.A.M contract, you have an additional smart contract risk associated every time you put it as somewhere else. But it's no different than putting your ETH or USDC or whatever it is into Compound. So I think from that standpoint, yeah, capital efficiency, right? That is a very good collateral, which is why in our design, we're launching with LP tokens of the top liquidity pairs. So what you're going to see are the top few liquidity pairs within Uniswap and SushiSwap enabled on our platform, as we very much are going through a very much needed redesign right now of our UI. We're going to make it much easier to use. When it's like 5 or 10 tokens, it's okay. When it's like 40, then all of a sudden you need a redesign, especially for dropping in another, over 10 LP positions in there people could use.
Yeah, I think you're right about the redesign, right? I mean, when I first saw C.R.E.A.M, I don't know, 6 months ago, I was pretty confused on what you guys do, to be honest. I mean, it's still the same design now, but I kind of get what it is, because when I first saw C.R.E.A.M, I was like, this looks like Compound. Why would I want to use C.R.E.A.M? But I didn't realize kind of the vision that you guys had was sort of to add the long tail of tokens. If I knew back then what I knew now, then I would probably have understood things better. But yeah, I see the point. Like a lot of beginners or those who are not so into DeFi, like will find it a bit confusing. And when you add LP token, I think that's going to be a game changer. I've heard of projects wanting to launch LP tokens, and I've tried to sell this idea to the alpha team, right? Guys, you should totally launch like LP tokens, right? And then I can draw out loans from my LP. So yeah, I think that will be useful. And I think what will be useful as well is to kind of like one-click convert between like the different the LP tokens from different AMMs. So like, I know you can easily swap Uniswap LP tokens into SushiSwap, but can we do the vice versa? And then also on 1inch, now that 1inch has, so I kind of moved my ETH WBTC liquidity from Uniswap to SushiSwap and now to 1inch, because you can kind of do kind of do like the liquidity mining there. So
Sure.
I'm not so sure if that maybe there's no sushi swap side because the AMM, like you mentioned. Yeah.
Yeah, and also beyond that LP position thing too, one thing we haven't covered today is the fact that we have ETH2 staking.
Yes, yes.
So, you know, that again, it's like, hey, I really want to do ETH2 staking, but I don't want to have my 32 ETH locked. I don't want to not be able to move it. I don't want to run the servers and run it wrong and get slashed. And then I want to be able to use capital. I want capital efficiency. I don't want to go and, you know, go to a staking service where I can't then use it as a collateral because I currently use my ETH as collateral. So why not use my staked ETH position as collateral? So the combination of all that quickly culminated into we should launch a ETH2 staking service and let people put money on here. So we have collected to date over 25,000 Ethereum ETH tokens on here, which is, and then I think we're number 6 on or the Genesis block on there. We're proud of that fact. And then, you know, we're just passing today the ability for users to use staked ETH positions on C.R.E.A.M as a 75% collateral ratio. So now we're not aware of any places today where you can take a staked ETH position with a fee. We take 8% of the total proceeds from that, not 8% of the total value, but 8% of the total return you get from the staking returns as a fee, which I think is very reasonable because I sure as hell can't run it myself for that amount of money correctly. And then, but in addition to that, if people borrow the C.R.E.A.M position, then you get an interest on that. And then most importantly, users can use that as collateral to leverage or borrow anything else.
So do you guys run like the node to accept, like, I mean, with this ETH 2.0, anyone can contribute like 1 ETH or 2 ETH into this pool, right? And then you get every 32, you sort of like put together a node, you spin up a node. Like, is it someone from your team spinning up a node and then issuing like C.R.E.A.M?
That's correct. So the benefit here is we don't set a maximum or minimum. So if you don't have enough for 32, welcome, put it in 0.05, whatever, gas is low, great, go do it. If you have like 2,000 ETH, you don't want to split it up in a bunch of tranches and manage it yourself, great, put 1,000 ETH here. And we have seen those size deposits as well. Oh. And you have this, now you have this C.R.E.A.M and you know, and it's liquid. You could trade in and out of it on Sushi Swap. We're working on getting something on Curve that would make a lot of sense for us as well. Yeah. And then ultimately, you know, when ETH2 launches, you can then redeem this for ETH2 tokens.
Yeah, I think it's interesting. Like you guys were so quick in launching this. A couple of other guys, like I think Lido guys, have this ST.ETH, and then Stakehound has also the Stake ETH thing, but I'm not so sure how well they're doing. Yeah.
Rocket Pool and their R.E.T.H, I think that they were testing last I heard. I haven't tracked them too much lately, but you know, but to give those guys credit too, like they're working on something different, right? They're trying to be a lot more decentralized, and I give them credit for that. Definitely, they're different kind of, you know, technical challenges based on what you're trying to achieve, and I think the innovation across the various different stake, you know, ETH2 pools are useful and good.
Mm-hmm. Let's talk about what's coming up next with C.R.E.A.M V2. You guys made an announcement, I think 1 week ago or so, about this Iron Bank thing that you guys are doing. So tell us more about what's in V2. What is Iron Bank? Everything that we need to know about C.R.E.A.M V2.
Right. V2, Iron Bank, super exciting. I very appreciative of the Yearn team support on this. So Andre worked on the prototype for the V2, and then our team executed on it, and now it's deployed. And so the Yearn V2 UI is still coming up, but you can go to, I think, v1.yearn.finance/lending, and you can see the current iteration there. So we have, it's basically C.R.E.A.M V1, or you could think of it as a compound contract, a compound setup, except that we will call it zero collateral. So zero collateral between protocols. So imagine if, I'll give you an example where Alpha Homora V2. So they no longer have to run their own money market. They can focus on building on their leveraged positions, and that the money market that they would draw from would be from the Iron Bank. So it's zero collateral insofar as Alpha Homora didn't come on Iron Bank or C.R.E.A.M V2 to deposit their assets so that they can They can borrow assets and do the leveraging. In fact, they just treat us as their money market pool. So protocol to protocol, but that's not to say there's zero collateral at all that you can just run off with the money, but that the collateral still exists as a user. So when you think about Alpha Homora V1 versus V2, in V1, you put up some number of ETH, let's call it, I put 1 ETH and I want 1 ETH leverage, and then I pay the lending fees for the extra ETH I got, but then I got 2 ETH now of farming power on some kind of LP position. That is useful, and I put up 1 ETH as collateral. Now, instead of that 1 ETH extra that I borrow coming from Alpha Homora, the IB ETH that they've done, instead now it comes out of Iron Bank. So zero collateral insofar as between protocols allows for capital efficiency, but it also doesn't mean that it's zero and that it has a high chance of not getting paid back. So that when you think about the capital efficiency game, then this allows for that example, that to work. But on the other side, when you think about our other launch partner, which is the Yearn vaults. So the Yearn strategists have done a lot of different thinking around this. And one particular vault, Sam Priestley's done this thing on DAI, an evolution of the DAI vault that's leveraged. So imagine if for every $1 of DAI that's in there, then they can borrow on the under collateralized position or uncollateralized of something less than $1 of loan. And now you have a large farming position that is greater than the deposit itself. But the safety valve there is that the strategies, we ensure that these strategies and any of our partners, when they do borrow, we whitelist them based on the fact that they're audited, that they're credible, and that the contract will pay back and we are the senior debt in a scenario, and that becomes more capital efficient. You don't need to over collateralize anymore. And that since we know exactly what it is that the strategies are doing or what it is that Alpha Homora is doing, we've seen the contract, we've audited it, then we know with full confidence that we can give them an under collateralized loan.
So at what point, how much can they borrow? Like, I mean, I contribute to Alpha Homora's IB ETH pool. So instead of lending my ETH on C.R.E.A.M, I sort of put it on Alpha Homora. I think they were paying 8-10%. I don't know. It changes.
Yeah, it's great.
It's good. I mean, it's quite good. But so I guess that will play a lesser role in Alpha Homora's moving forward, I suppose, because they're going to tap onto C.R.E.A.M's money market moving forward.
That's right. And we want to encourage all of the Alpha Homora IB ETH takers from V1 to migrate to Iron Bank, because that's where the liquidity, that's where the utilization will come from. But yeah, exactly. So that becomes, you could think of it as that money market has shifted over to the Iron Bank. But that allows for Alpha Homora to focus on their core competence, which is really kicking butt on that leverage thing. And I myself am a depositor on the IB ETH as well as a user on the leverage protocol, and I think it's fantastic. The capital efficiency thing here too is the way of the future. The easiest way to think about this is when I explain to some of my friends, is the ETH contract no borders. They don't care that you went from Alpha Homora deposit to a borrow on an Iron Bank. Like the smart contracts just talk to each other and the conditions are met and they execute. So there's no need for, I have to put assets on C.R.E.A.M to borrow from C.R.E.A.M. It could be that I put assets on Alpha Homora and borrow from C.R.E.A.M. And to the end user, it all feels and looks the same, and that the smart contract executes and ensures credit solvency. And I think that's a huge innovation as we in V2 get closer to a protocol vision that Andre talked about, and then achieve the capital efficiency and effectively become the B2B enterprise liquidity backbone for DeFi.
Yeah. How much like ETH can like Alpha Homora borrow from the Iron Bank, for example? I mean, it's under collateralized, so like there must be a limit before, I mean, in case something blows up entirely on Alpha Homora side.
Yes. So there's a notion of a credit limit. So each, it's the process of how the Iron Bank works is there's a whitelist process. So once a protocol is audited, reviewed, and accepted, then that protocol is then whitelisted, and through the whitelist process, we'll assign a US dollar denominated credit limit. And it's US dollar denominated because in Alpha Homora V2, one of the gripes I had about V1 was that, I'm short ETH. And so like, I wish I was short USD instead because my returns would be higher. But the V2 design that to me that's most useful is that you can then be borrowing stable coins instead of purely ETH, although you could still borrow ETH. So from that standpoint, we have a US dollar-based credit limit because we don't know if you're borrowing just ETH or if you're borrowing ETH plus stable coins or something like that. And we don't want to be specific about you can borrow, X amount of ETH and Y amount of USDT, et cetera. So it's a dollar value based thing. So as protocols come and get whitelisted, we'll start with some low amount of credit limit. And then as creditworthiness improves, you can think of it that way, then the limit goes up. But so far in V1, I think they've moved, at least if I remember this correctly, 100,000 ETH. So that number is going to be huge.
Okay, cool. And so you guys will start Iron Bank, like when is V2 launching? When is Iron Bank taking place?
It's up and running now, actually.
Oh, okay.
We haven't really pushed a bunch of capital that way immediately because the utilization is based on the protocols borrowing, and that we're in the process of finalizing some audits and reviews of the stuff. But whenever it is that Alpha Mora launches, I think soon. They said January, I believe. So soon, and once that goes, utilization rate will go up. So that's when we're going to start pushing for more liquidity in there. But for any of your listeners here on the podcast, I think it's worth checking out the interest rates there. It's sort of a chicken and egg thing, right? Like if you have a bunch of people borrowing and nobody lending, then it doesn't work. And if you have a bunch of lending and nobody borrowing, then that also doesn't work, because the lending rates and the balance rates need to adjust and be profitable, useful for everybody.
So this C.R.E.A.M V2 is kind of like a lot of back end, like protocol to protocol improvement. As a human user, like, will I see any changes on like the C.R.E.A.M.finance, app.C.R.E.A.M.finance front end, or pretty much not much changes on that side?
Right. The V1 continues to live on app.C.R.E.A.M.finance. The V2, the Iron Bank, lives on the Yearn.finance. So that will continue. The best way to think about this is they're basically two different lending protocols, and one is like a tranche debt. So on Yearn, it's like the blue chip DeFi a tranche debt with much lower risk. And on app.C.R.E.A.M.finance, that's the V1, that will continue to accept and list a long tail of assets. So it becomes like a B tranche debt with a little bit more risk, but of course, more risk comes possibly more returns. So far, the plan is to allow for A tranche, B tranche debt concept, but certainly we're looking to further integrate automation across protocols. So we're evaluating the possibility of V1 going with an Iron Bank based design so that we can start whitelisting protocols there as well. That's the latest thing we've been discussing, so that we continue to focus on lending, but our other ecosystem partners like Yearn Vaults and Yearn Strategists can start pulling some liquidity from the Iron Bank first, and then secondarily, if they want to do some kind of other vaults and with direct capital efficiency via a credit limit rather than having to deposit a collateral on V1, that would be another way that would increase utilization, increase capital efficiency, and then make the whole thing a lot more impressive. And then hopefully that makes everybody happier, cheaper borrowing costs, as well as better supply rates.
Yeah, and then you guys planning to open it up to like non-machines, for example, like market maker. I think Alameda was borrowing uncollateralized loan on, was it Aave sometime earlier late last year or something like that?
So that's interesting. I think with protocols and strategies, we could look at the contract and know exactly what they're doing. Like, you're only doing this DAI vault. You're only going to go take this DAI and do X, Y, and Z on Compound, on Maker, etc. Great, we get that. If we start opening up credit lines to humans, unless we lock them down to specifically where this money can be spent, it's really hard to tell what humans are going to do. And I don't want people taking the under collateralized loans and buying Lambos with it, let's say. But look, if there's a way we can control for that safely, we are open to that idea. But for now, we're focusing on machine-to-machine enterprise type of automation. We want to stay away as much as possible from needing humans to look at these processes. But for now, humans are super necessary to evaluate smart contracts, et cetera. But the vision continues to be that we want to automate the hell out of this thing, and that efficiency can be gained.
Okay, interesting stuff. Anything else that is coming in C.R.E.A.M that we haven't really spoke about today yet?
The funny thing about that is that I could ask myself that very same question, and the Leo from 4 weeks out would be like, check it out. We got this new thing. It's super cool. It's going to be more capital efficient. It's going to be more automated. this latest craze in blank requires this, other functional tool or asset, and we're going to beat the hell out of that. So unless I can channel the future Leo to tell you this, I won't be able to know the answer to that. But certainly stay tuned. We're always tweeting and discussing, and you can join us across our Discord or forums and talk about how else ideas may be helpful to DeFi.
All right, cool. Yeah, I think we spoke a lot about C.R.E.A.M today. So yeah, the best place to follow about C.R.E.A.M, I suppose, would be your Discord. Is that right?
Discord, Medium. We post all the relevant things on Medium and Twitter for sure. So we love constructive criticism. Feel free to come and let us know how we can do better. Yeah, thank you for having me, and thanks for the support generally from the community. We can't wait to keep making DeFi more capital efficient.
Thanks a lot for taking the time to explain all about C.R.E.A.M today, Leo. It's been a great honor to talk to you.